Good morning and welcome to the XM.com weekly market update. With me again is Peter Maguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Data. Not much happening in the Australian market, so we'll head straight to Asia. China,
Sure.
The CPI numbers came out last week, up slightly, but still fairly subdued.
Absolutely. And, in a lot of ways, they just need to kickstart their economy from an internal engine perspective, but and that's for domestic consumption. But the issue is, you've got a weak global market, credit cards are tapped out, and people are saying, well, they've just got no more firepower to buy, Chinese goods.
Yeah, and I think trying to stimulate the domestic economy internally as well is proving to be problematic as well.
Yeah, big unemployment numbers, and that's only going, I think, probably going to ratchet up on the impact that has from a socio-economic standpoint. And what happens, and I know we spoke off, but for the viewers, President Trump has said if he gets re-elected, he's going to reintroduce the tariffs and probably dial them up. So that would, I think, to the likes of China and bring that manufacturing back home to America to make it competitive. This isn't good news for the Chinese economy.
No, not at all. We've got other data out later in the week, which is the industrial output numbers, retail sales, etc. So it'll be interesting to see what those numbers look like if there is a slight improvement. Yeah,
well, you'd want to be, because if you're looking since the start of the year, it's been pretty much downtrend for industrial production, and retail sales, that's a bit, washy. So it's up and down, but it'd want to really kick the ball out of the park.
Yeah, for sure. Over to Japan, once again, huge week last week on the yen. You look at the chart there, that movement from a currency perspective is just enormous. Now, it's bounced back a little bit there, but plenty of activity around the BOJ, the carry trade.
Extraordinary.
Yeah, it was an extraordinary week.
It sure was, and that, I think it was the peak was about the 11th of July. You're down probably 13-14% from 162, nearly a 162 handle, hit 145 and bounced back to 147. And then, that's only against the US dollar. Also, you had big moves against the pound and against the likes of the euro for the yen. So plenty of opportunity for, carry trade traders. And Mrs. Watanabe, I'm sure, would be pretty happy with that move.
Yeah, and we've got the Japan GDP numbers out later in the week as well.
Which will be interesting to see how they fall.
For sure. Gold. Now, this chart gold price is actually slightly higher than that now, but it looks like it's hit an all-time high this morning.
Yeah, I got a screenshot here about 25.16 on Bloomberg. So, the storyline hasn't changed, Andrew. Central bank buying, what we've seen as far as volatility, and it just, the numbers tell the story. And what you've seen over a 5-year window, and that chart's a great chart to really look at, considering in that October 7 or October 8 sort of number, it was at 1850 odd, 1800, and then it's bounced strongly from there. That's an enormous rally, massive rally in about an 8-month window. Over the last 5 years, it was sitting at about 1460, and now you're at 25. So you're up the best part of 67, 68% in that 5-year window.
Yeah, not a bad return year on year.
No, it doesn't pay a coupon, and you keep on telling me about the ETFs and I'm very much aware of that, S&P and NASDAQ, but no, it doesn't pay a coupon. But how could you not be in the gold market from a physical standpoint, just to have some under the bed? And that's why, the globe, you look at Middle East, you look at China, look at India, and all through Asia, it's, people hoard the stuff and put it under the bed.
Yeah, certainly do. Looking at oil once again, we've got a bit of a spike in the oil price. Not unsurprising considering what's happening in the Middle East at the moment.
Yeah, where do you start? I mean, what's interesting is the narrowing of the spread between WTI and Brent. That's narrowed. And the other thing is you've nearly got WTI cranking through 80. So that upward momentum, geopolitically driven. And if you do get something that escalates, and they're all saying you're going to see Hezbollah and Iran do something in the short term, then I feel as though that's going to underpin price, and it could go on another rally.
Yeah. Good deal. It's looking that way at the moment, but we've seen that quite a bit over the last year or so, where it sort of heads up towards that $90 mark.
And then peters out.
Seems to hit a bit of a ceiling, but we'll keep an eye on that.
Yeah.
Finally, just the dollar index, obviously under a little bit of pressure, talk of lower interest rates in the US, which may or may not happen in September.
Well, that's right. I mean, you're looking at those numbers coming out this week, and as you mentioned, you've got retail sales, I think, come out Friday. So all of that take on board, plus your CPI. If Fed Chair Powell and his gang say, yep, it's a fifth, and Citigroup, I mean, you can't go away from the big investment banks. They're saying there's Citi, Goldman's, I think JP Morgan even said 50 basis point cut. So if that's how it materialises, and you see, if that was to happen, and then if you saw another 50 by year end, and if you saw another, they're saying 15, there's about 110 basis points of cuts they're penciling in, then that would really, I think, push the US dollar index, that 102 handle, may even crank a 101.
Yeah, and there's a lot of sort of few articles I've looked at where there's a lot of inflow into out of fixed income ETFs into equity ETFs. Last month, one of the biggest flows altogether. So, which is fairly significant. But once again, you would think, is 50 points a bit too drastic?
I don't know. It's a hard one to debate, because if I just keep on listening to the likes of, Fed Chair Powell and his story, and what the other non-voting members, the Goolsbys and all of that, saying, if the big banks are saying it, I've got to err on their side, because maybe they've got better data from their consumers to know, or their retail consumers, what the bank balance is and how much credit they've got, and what their sales process is.
Yeah, but those numbers out later this week. You've got the CPI, you've got the PPI, and you've got the retail sales in the US. They're all pretty significant
big data drops.
So if they are CPI lower, retail sales weaker, then you would sort of think September would be a given.
Oh, yes, exactly. And it's either going to be two ways. It's either going to overwhelm or underwhelm. And the impact that has on either side of the equation. Bang, up goes the coin.
Yeah, for sure. So plenty to look at, and we can touch on that next week.
Look forward to it.
Okay, thanks, Pete.
Thank you, Andrew.
And that's the XM.com weekly market update.